Good afternoon, everyone. It's Gail with Tradershelpdesk, and I wanted to go over the Nasdaq because it was a really great touch bracket. I did a couple of them today on the Nasdaq. So the one thing that alerted me to the fact that we're probably going to have this move was the daily chart. You can see here we made a bearish reversal bar last week. Then we came back and we tested it, and that is a small double top that has formed here. And it formed with the stochastics being over 80, the RSI at 50, and of course the ADX above the 70 area. So to me, that indicated we were going to have a big down move. So when I went down to the lower time frames, which in this case is a 45, a 12, and a 3, when we started this morning, we had this bearish bar developing, and I actually went short on one touch bracket here, and I exited that touch bracket as this bullish bar was forming, and then I went back in again on this one. Now, the reason that I went back in on this one was because we had the formation over here on the 12-minute. And give me just a minute. So we made a high here, and then we came back and we made another high here. So this is your first entry of the day. You can see that they're testing this blue moving average, and you can see that, hey, it's not going anywhere. They're not able to break through it. They have found the resistance area, and once they found the resistance area, then more likely than not they were going to go down, which is exactly what happened. Now, it was right about in here that I actually exited that. You can see the stochastics is overextended. I did not like it because it was overextended to the downside, and I was not willing to give back profits. So in this case, I went back into the market, and of course it did go up, and it made that second double top formation in here. This was after the 10 o'clock market report. You can see that they made a high here. They went back to test it here, then formed the bearish bar, and that was where I went short again. Again, the same almost identical pattern to take me out of it, and that was the fact that the stochastics was overextended, and it was more than likely going to have to retrace, and in this case it did. Now, I exited right about this bar as it was building. Now, also, if you look over on the 45, you can also see as this is making lower lows. So from here to here, you made a lower low, but the stochastics, of course, did not. And that is something I'm always watching. When you get this divergence in here, then it is a good clue that they need to push back up because they need to find a resistance area, okay? And I'll wait. Sometimes I can counter trend trade this. That was the euro trade that I was talking about earlier today. But in this case, you could actually turn around and trend trade this, anticipating that it will come back and take out 77.40. So it's just a great example of how it really doesn't matter whether you're trading Forex or you're trading futures, or even if you're trading stocks. The techniques that we use with our indicators work on all of the markets and any time frame that you would want to trade.